Okay, let's talk about car insurance. It's one of those things we all have to have, right? But be honest, do we really get it? It feels like this whole world of confusing terms and, these hidden gaps just waiting to cause a problem. But what if you could actually build the perfect policy? One that truly protects your car, your life, without you paying for stuff you just don't need. All right, let's get into it.
So I'm willing to bet you've heard this phrase a million times. Full coverage. Maybe a lender told you, hey, you need full coverage, or you've asked an agent for it yourself. But when you ask for full coverage, what are you actually asking for? What does that even mean?
Well, here's the surprising truth of it all. Full coverage doesn't actually exist. Yeah, you heard me. It's an insurance industry myth. It's a term we all use to describe a combination of coverages, but there's no single policy you can buy called full coverage. So if it's just a myth, then what's real?
Well, that's what we're going to do in this explainer. We're going to build your understanding from the ground up. First, we'll decode what people really mean when they say full coverage. Then, we'll get into the fun stuff, how to customize your policy. We'll even tackle some really modern challenges, like insuring electric vehicles and covering gig work. And finally, we'll put you in the driver's seat of your own protection.
Okay, so I want you to think of your car insurance policy kind of like a set of Legos. There is no single full coverage brick. Instead, you get to combine several core building blocks to create a structure that perfectly fits what you need. So let's break down the 6 most common pieces.
The very first, most fundamental block is liability coverage. This is the one that's legally required in pretty much every state. Its entire job is to pay for the other person's problems, their medical bills, their car repairs, if an accident is your fault.
And here is the single most important thing to get about liability. It's all about protecting you from getting sued into oblivion by covering the other party's costs. See what it doesn't cover? Your medical bills, your car repairs. It does absolutely nothing for you and your property. For that, well, you're going to need a few more of those Lego bricks.
So this is the piece that actually fixes your car after a crash. It doesn't matter if you rear-end someone or you hit a guardrail on a slippery road. Collision coverage is what pays for your vehicle's repairs, minus your deductible, of course. And hey, if you have a car loan, your lender is definitely going to make you have this.
Okay, so what about all the other random, terrible things that can happen to a car that aren't a crash? That is exactly where comprehensive, or what insiders just call comp coverage, comes in. You can think of it as protection from all the unexpected, non-driving disasters life throws at you.
So what does that really mean? It means a tree branch falls on your hood during a storm? Comprehensive has got you. Somebody keys your door in a parking lot? That's covered too. Here's a classic one. You hit a deer on a back road. That's actually a comprehensive claim, not a collision claim. It's for all the chaos that happens when your car isn't actually colliding with another vehicle.
All right, let's quickly round out our core set of blocks. Uninsured motorist coverage is absolutely crucial. It protects you when the at-fault driver breaks the law and has no insurance to pay for your bills. And MedPay or PIP, it just depends on your state, that helps pay for your medical bills right away no matter who was at fault, which can be a real lifesaver. So when people say full coverage, what they usually mean is having these 3 big ones together: liability, collision, and comprehensive.
Okay, now that we've got the main structure built, it is time to customize. Look, your life isn't some standard, off-the-shelf thing, so why should your policy be? This is where we start adding the specialized pieces to really truly make this policy your own.
And the tool we use for this is called an endorsement. Sometimes you'll hear it called a rider. All it is a simple, formal add-on to your policy. You probably already have some common ones, like roadside assistance or rental car reimbursement. But trust me, they can be way more powerful than that.
Let me give you a perfect example. A standard policy is going to pay you the actual cash value if your car is totaled. That's basically what it was worth the second before the crash, including all its depreciation. Now, imagine you have a beautifully restored 1966 Mustang. Actual cash value would be a complete disaster. But an agreed value endorsement lets you and the insurer set that car's true value, say $50,000 right up front. If it's totaled, you get the full 50 grand. No arguments. This is how you protect a real investment.
Now let's see how this all applies to the world we live in today. Cars are changing so dramatically and our insurance has to keep up. Electric vehicles. They aren't just cars with different engines anymore. They're basically supercomputers on wheels with some really unique and really expensive parts.
This number right here, it says it all. The battery in an EV can cost up to $25,000 to replace. Now, sure, your collision policy might cover it if you get in a crash, but what if it just fails or it gets damaged from a power surge while charging? Your standard policy probably won't touch that.
And this is exactly why EV owners need to look at specific endorsements. Battery protection for issues outside of a crash is vital. You also need coverage for that expensive home charger and your cables. And get this, what happens if someone trips over your cable at a public charging station and decides to sue you? A public charging liability rider is literally designed for that exact modern risk.
So another huge shift in how we use our cars is the rise of the gig economy. Driving for DoorDash or Uber Eats or Instacart, it seems so simple, but it creates this massive, dangerous insurance gap. Why? Because a standard personal auto policy explicitly excludes using your car for commercial activities. And yes, that includes delivering food for a...
To really understand the risk here, you have to look at a delivery gig in phases. When your app is off, you're just driving for yourself, and your personal policy covers you. Simple. But the moment you turn that app on, everything changes. Insurers see these next 3 phases as commercial use, plain and simple.
And this chart, well, this is where it gets scary. In phase 1, when you're just waiting for a delivery request, your personal policy is void, and most of the delivery apps offer zero coverage. You are completely uninsured. Then in phases 2 and 3, the app's insurance might kick in, but it's often just the bare minimum liability. So if you cause an accident, it might fix the other person's car, but you are totally on your own to repair or replace yours. That is a massive financial gap.
So what do you do? Well, the solution, thankfully, is pretty straightforward. For what's usually just a small increase in your premium, you can get a rideshare or business use endorsement. It just extends your good personal policy, filling in all those dangerous gaps. It makes sure your own coverages, like your collision and comprehensive, are there to protect you through all the phases of your gig work.
So we've deconstructed the full coverage myth, we've explored some really powerful ways to customize your policy, and we've even tackled the unique insurance needs of modern cars and jobs. So now it's time to put all this knowledge to work for you.
This is the key question you have to ask yourself. Is the policy you bought 3 years ago for your old gas-powered car and your simple commute to the office really the right fit for the EV you drive for Instacart today? Probably not. It's time for a quick self-audit. Here is your action plan. It's just 3 simple steps. First, pull out your policy's declarations page. That's the one-page summary of all your coverages. See what Lego bricks you actually have. Second, be honest and assess what you need right now. And third, call your agent and have an informed conversation. Don't just ask for full coverage. Ask about an agreed value endorsement for my classic car or a rideshare endorsement for my delivery work.
At the end of the day, our cars aren't just simple machines anymore. They're huge investments, they're rolling pieces of technology, and for some of us, they're even our place of business. Your insurance policy needs to be just as sophisticated, making sure your protection has evolved right alongside your vehicle.